I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Danielle Park, editor of the popular blog Juggling Dynamite and president of Venable Park Investment Council Incorporated. Welcome back to the show, Danielle, and happy Thanksgiving.
Thank you, Jim. Same to you.
Well, the federal government has decided one of the ways to cool the rampant real estate markets in Toronto and to a lesser degree now in Vancouver is to bring in a mortgage stress test that pretends mortgage rates are around 4.5% instead of the current a little more than 2%. Is this a good idea?
Yes. Anything that can sort of reintroduce any kind of sanity into the equation about how much people are borrowing today in Canada for, speculation in housing. They think they're making an investment, but when they're doing it with almost nothing down and with stretched, way in terms of their debt service payments, just even being able to sustain, even if they don't lose their job, which is, a scenario where everyone likes to believe there'll never be a downturn in the economy from here and it's only going up. Even if you were to keep your job, the problem is that just trying to maintain the upkeep and maintenance and utilities while feeding yourselves in many of these scenarios is already stretched beyond anything that's realistic. So we have a massive problem in Canada. We have seen this play out in other countries. It always ends badly. And, the people who have been growing fat on the commissions that they're reaping up front, that being, the people selling the debt, whether that be the mortgage brokers, the banks who have been issuing it all, but all backed by the taxpayers in Canada through the mortgage fund. The realtors, they're all crying foul now because, they don't want anything to interrupt their gravy train. But it's a crazy system that we've got going, and the risk is left and right. And it doesn't do young people or families any good or any help. In fact, it does them harm to make them stretch for these insane prices, even if there's no, people pushing through documents and saying, oh, you can afford it. It doesn't do them any favors. It locks them into a life of debt servitude and pain and often loss because, as I say, very often these things go badly. So, yeah, I'm grateful that we've started, you guys started in Vancouver with the foreign tax initiative, and now we're having some tightening up the mortgage rules. These are all steps in the right direction. It's just ridiculous it's gone on this long.
You don't like the current banking culture where it seems it's okay to rip off your customers because you pay a small fine in comparison to your income and life goes on.
Yeah, well, this has been one of the cancers that has been eating us for, over the last 20 years, increasingly so, and it really has to stop. We've got this entire industry that's set up to abuse trust and take advantage of every opportunity they're given. And we all pay the price. We pay the price in extreme fees that are prevalent throughout the system. We pay the price in unfair advantage they take of us, whether it's in trading regimes, front running. We pay the price whether it's in, an economy that's increasingly fragile, full of households that are toxic with debt levels. It doesn't do any of us any favors in the long run. And also, as I said, as we've seen in the past couple of blow-ups, ultimately taxpayers are put on the hook to clean up the mess, to recapitalize the banks, and meanwhile, we need trillions of dollars to make substantive, life-improving investment in things in the world that matter, like I say, water, food, energy systems, sanitation, education, all the things that are actually life-supporting and that we desperately need are being left unfunded because we keep funding all the capital towards the sustaining the asset bubbles and the debt bubbles. And it's just a very bad model. So we have to really route, there was, I don't know if you caught this news this week, Jim, but we've talked in the past many years about MF Global, the big blow up that happened, I believe it was 2011-12 at this point, when John Corzine, who was this, revolving door person who'd been in and out of government and was running this MF Global, and then got into this rehypothecation scandal where they were giving their assets to JP Morgan as collateral. They're giving, their clients' assets in accounts to JP Morgan as a collateral for the loans that the firm owed. And then when something went wrong, JP Morgan took the money and the clients were SOL, and John Corzine was left, saying, oh, I didn't know and it's not my fault and all that. Well, there's been a bunch of lawsuits ongoing since then. The problem being that he's your typical, billionaire that came out of the finance sector with incredible compensation in his everything he was doing, as well as all these political contacts. So you've really had no ability to prosecute that man in any meaningful way, whether there's a conviction there or not, because he's got this army of legal defense that just deflects and buries and over documents and papers over everything. So there was a story this week that he's now agreeing to a $5 million fine. At least that's what the proposal is. A $5 million fine. This isn't a firm that $1 billion in client funds went missing. JP Morgan was enriched by the process. Clients were used and abused. Just the typical. They didn't know their assets were being rehypothecated to JP Morgan. It's fine print in the documents of the account opening that they had. So this is just all examples of why we can no longer afford to have a system that's dominated by these finance types who revolve in and out of government and regulators, who have subverted the rule of law and who take advantage of everything. Whether it's the Wells Fargo scandal, the Morgan Stanley was charged with similar practices to Wells Fargo in these insane sales targets mandated to their staff, so that whenever a person comes into a branch, to do any banking, they're pummeled with sales puff and cross-selling of every kind to get them to sign up for all sorts of products which are not in their best interest. So it's very simple. Finance captures something like 25% of the profits of corporations in the S&P 500, but they only provide 4% of the jobs. And when you look at the amount of funding they've extracted from all of us, that's why they are so disproportionately paid and enriched. That's why the greatest proportion of billionaires come from the finance sector. These are the big multinational conglomerates that have been allowed to merge together over the past 20 years. And we really have come to the end of the road. We must cut that off. We must sever their ability to use us taxpayers as the backstop for their speculative activities and bailouts. We must put the responsibility back onto the individuals in partnerships where they bear their own risk, and we must have deposits backed by government insurance completely separate from and prevent them from cross-selling their investment products where they make all their fees and commissions onto banking customers. So those are just lines that have to be put back in the system.
Are Canadian banks doing the same thing as those American banks, but because they're smaller, they kind of slide under the radar?
Oh, cross-selling is alive and well in Canada. Anyone that's been into a Canadian bank in the past few years will attest to this. Many people have told me. I've experienced it myself, where you have money in an account and you get a call from someone. Why do you have money in your account? Wouldn't you like to meet with a financial advisor? This is just like spooky, weird, voyeuristic. Like they're looking at your savings as this pool of revenue waiting to be had by them. And not only that, they give this very self-serving, damaging advice to people who come in with money where they want to pay off a debt. They're very often recommending, oh, well, why would you pay off your debt? Why wouldn't you, keep the debt and indeed increase the debt and, use the cash to buy some of these products? It's just, and the whole really damaging part of it is that they call this advice, right? Again, back in the old days, after they broke up these conglomerates in the 30s, if you were dealing with a stockbroker, they were called a stockbroker. You knew they were there to sell you stocks, sell you products. They weren't giving you advice. They were giving you products that you could buy. And when you went to deal with your bank and you were talking to your bank manager, that staff was in charge of taking in deposits and making loans in the local community, and they were responsible to make sure they were good loans because they had to account for collection. And if there was bad loans, that looked bad on the staff in the branch that was making the lending decisions. In the last 20 years, that all got stuck together. And all of a sudden, all the lending decisions went to a central location. This happened in Canada as well. Central location, scale, right? Remove the whole credit assessment character out of the equation and do it strictly by, reviewing forms in head office. And the farther you get away from that individual accountability, one-on-one contact, knowledge of a person and their business model, and accountability of the people making the loans with whether or not it's collected. As soon as you get far away from that, that's the mess we've made, right? That's where we are today. That's where you get to a system that is, continuing to add debt and then packaging it off and selling it, and then having room to add more debt and then packaging it off and selling it. It's that assembly line that has, bale after bale after bale of debt going up the conveyor belt, and that's how we've got to this point where the world is literally, the IMF released a report this week that the world is now something like $185 trillion in debt. And that was just at the end of 15. We're leaps and bounds. We keep doubling debt in the world every few years. Like it's past any this is like a virus that's just going out of control, and we're all paying the price. Slow growth, poor job opportunities because companies are downsizing all over because corporations are up to their eyeballs in debt now as well. So we're really in the final innings of anything that can anything that's sustainable in this area, and that's a good thing because we're so past anything sane here that it really does have to come to an end. But at the same time, the status quo is fighting tooth and nail. The people that have been abusing and taking the most profits out of this system have a lot of political power, and they are the ones who are fighting, so that there's inertia in any political process and nothing actually gets done. The one that we have as a leading light here is the Brexit stuff, right? Where Britain has announced they're going to trigger the exit clause, and the pound's been taking a pounding, right? But the economy will actually do better in Britain when they are no longer tied to the EU, and where they have, probably an exodus of some of the banking stuff. That would be great. A mean reversion of some of the prices so that housing comes back down. As the pound falls, the goods and services in Britain become cheaper. This will help their exports. This is the kind of rebalancing that we actually need in most economies in the world. And so I'm grateful to see that one moving forward, at least towards some change, whereas everyone else still seems to be hamstrung by the the status quo that wants to keep it all the way it was feeding them.
We'll have more with Danielle Park right after the break.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Danielle Park. Danielle, I know you're not a fan of carrying big debt. How can a household actually control their costs and get things back to what should be called normal?
In a lot of cases, truthfully, the answer is they should sell their house. A lot of people have bought more than they should have ever bought, both on this whole, home and garden television marketing fluff that everyone, what a romantic idea, everybody wants to own a house. I get that. It's nice to own your own house, but if you've paid the wrong price, if you've paid far too much for the house, if it is taking away your economic resilience, your ability to cover other bills, to have a nest egg, to save for the future, to save for your kids' education, because everything's going into servicing the mortgage and the cost of the house, the answer is you've probably bought more house than you should have, and that you should downsize it and move to a cheaper accommodation, a rental if necessary, and just allow your savings to build up. Because people don't appreciate that if it's taking you 20 and 30 years to pay off this, incredibly expensive asset, you're way behind on all your other targets. Meanwhile, you're probably not having the best of time in terms of ability and flexibility in your life, whether it be to travel or to take any time off or anything like that. But if you're sold this romantic notion, and the brokers and the bankers and the mortgage dealers are all telling you, this is what smart investing is, chances are it's smart for them that you buy those products, but it's not so smart for you. And I think that a lot of people just need to admit that. And it's not failure to admit facts, right? To acknowledge that you've made a bad choice, and if you can exit, because here's the thing, I think a lot more people are going to be wanting to exit in the next year and two ahead. Not only, as we've discussed before, about boomers who are needing to liquidate and move down to free up cash because in a low yield environment, their savings don't pay them what they need to make ends meet. So they're going to need to liquidate some real estate, all at the same time that you have these people who at the margin bought housing they should never have bought because rates were at these historic lows, because lax lending standards were prevalent throughout. Those people have got into too much house, and they're going to need to downsize or sell their housing as well. So what you don't want to be doing is coming to this revelation of necessity, right, where you have no other option but to sell or get out or lose your place to the bank and that sort of thing. So it really takes proactive steps in admitting facts. And it's we've got this almost shame culture around admitting that something is too expensive for us or that we're too over-levered. I think that great peace and growth is possible when you can admit that was a bad choice and say, I think what we need to do is downsize this. To hell with all the marketing and people telling us how to get on the property ladder, what makes sense for our life. And let's figure out a budget where we can actually afford not just a roof over our head, but all the various things that we find are critical to our future. So I think a lot of times it just comes with admitting truth and then getting very practical about how to restructure your affairs.
Look at the propaganda you face every day with all the commercials telling you need another credit card. You have to purchase this product to look cool to all your neighbors. And of course, North America has been, pumping out that propaganda to buy, probably since day one.
Mm-hmm. Well, it's become more prevalent too as media and all the various channels have got more sponsor focused and it's no small coincidence that the most profitable companies in the world have been the finance sector and the energy sector, the oil companies, and that they have come to dominate the information that we are fed on a daily basis, whether it be through news media, whether it be in the media, the commercials, the print, the television, everything that hammers us day and night comes from those two biases. And so a lot of the information is completely misleading and in other cases just plain, harmful. And yet they're able to manipulate people every day through these means. And it's because they've been so grossly enriched that they've been able to pay for all this, and the rest of the more honest or client-focused services in the world, which are trying to, bring the world along to a better, more sustainable, healthy balance and things, they typically don't have the funds. So it's almost like a political contest, right, between those who have used and abused and made off with the spoils and now have the funds, as I say, to control, whether it be lawyers to defend and change law in their favor or protect them from any lawsuits that come their way, as well as just controlling the message and then queering the policies in their favor. So we're at a tipping point, I think, because for all the reasons that we've talked about many times, but basically because the income disparity and the wealth disparity has grown so great. You look at the jobs number out of the U.S. today, less jobs created than people had hoped in September. And not only that, again, as has been the case all along, the quality of jobs that are being created in this economy is very poor, right? They tend to be in the restaurant sector, for example, rather than in any kind of skills-based, higher-paying service. And we are having still much scaling down of in the mining sector, the oil and gas sector, still very much in mean reversion. Notwithstanding, we had a rally in oil in the last week on this belief that OPEC was going to come to a freeze agreement, but a freeze near all-time record highs of production while the rest of the world is still pumping it out and demand is rolling over. So substantively it isn't going to address the oversupply problem, but you get a bounce in oil and then everyone is hoping that, that prices are going to continue to go up from here, but this has been a long period of stagnation. This is much worse than the 2008 downturn. And I think that companies who borrowed for a while to pretend and extend, which is what's gone on in the last, say, 2 years, even as oil turned down, those companies borrowed more and more as they did in 08, but in 08 they got a quick rebound out in 09, and so they were hoping that play would repeat itself. It's not. And so this is a much different beast. This is an end of a secular period we're into. It's going to be equal and opposite in the other direction. Much longer, much more stubborn, much more mean reversion work to be done this time than any of the cycles we've seen in the past 3 years. The past 30 years even. And so I think that it's that coming down, it's that admitting and seeing that cuts have to be made. It's where people are forced to go and reinvent either, themselves or their companies, their service offering. But that ingenuity is where growth comes from and where real investment that matters will come from. So it's all a healthy process. So I guess I just try and encourage people, that we have to be resourceful. We can't keep doing the same old and expect to get out of this, maintaining the same destructive habits. This is a tipping point in our generation. It's going to bring a new view and a new set of behaviors. And as I say, being proactive and not letting the train hit you and knock you off, but actually trying to take your own fate in your own hands and making these decisions before you're, quote, forced to, I think is the answer. Because when people do that, they can become empowered and make better choices going forward.
Danielle, thank you so much for chatting with us.
Thank you, Jim.
My guest has been Danielle Park, editor of the popular blog Juggling Dynamite. And have a great Thanksgiving, by the way.
Hey, thanks, Jim. You too.
You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Questions can be sent to info@HowStreet.com. I'm Jim Goddard. Happy Thanksgiving.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.